Hello, and welcome to Pro Trader Strategies Market Commentary for Wednesday, October the 5th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters, I don't know what's in your portfolio, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. We've got a couple of economic data points coming out today here in the United States. We had final services PMI come in a little bit better than expected at 52.3, was expected 51.9, and the ISM non-manufacturing PMI came in at 57.1. And remember, that's the ISM is the Institute for Supply Management. So it's not that flash PMI that we're normally seeing on a weekly basis. This comes out as a monthly, and anything that is above 50 is expansion in the economy. And that non-manufacturing really surprised the upside at 57.1, was expected 53.1. Also, factory orders popped a little bit. They were expected to be a bit of a pullback there at 0.4%, came in at a positive 2.2%. So that was a surprise to the upside. That's good for the manufacturing. Basically, all of these PMI numbers are really reflective of one another. And then we also got crude oil inventories, came in as another drawdown of 3 million barrels, was expected to be a build of 1.1 million barrels. I've been talking about this supply disruption down in the Gulf. Doesn't seem to be really showing up in the economic data points, but we also saw distillates and gasoline inventories continue to rise. So whether that supply has been put into the funnel yet is yet to be seen, but what we could be just seeing here with these drawdown in inventories is that the producers are converting that to heating oil, which is the distillates that goes into manufacturing as well, and the gasoline prices that we all use on the street. So that could be the real drawdown in inventories, where we haven't replenished that supply with that 14 million barrels that's bobbing in the Gulf. Anyway, on to the broader markets. We got crude oil pushing higher by another dollar, really looking to test that $50 a barrel area. We're at the value area high, which should act as a bit of resistance there. So keep that line in the sand on your docket. Really, we could call it 50. It's a psychological level going forward. Then on to gold. Gold's pushing lower again today after yesterday's big sell-off, down $1 today, but right on the 200-day moving average, really showing support there. I will talk about this a little bit later, where I have GDXJ on and did have to go through a little bit of maintenance on that to protect that position. Onto the bonds pushing lower as the overall broader market on the equities is pushing higher. We've got the bonds down almost a point right now, at down 22 or 25 points on the day, but right at the point of control. Dow Jones Industrial Average up over 112 points right now, but we are still stuck in the mud right here within this range. The broader market just really trending sideways. Every day we have a big day up, next day seems to be a big day down. On to the mini S&Ps, up 10 points on the day. Nothing really there. It's really pretty much of an inside day. Overall market probably trying to decide whether good news is bad news or if good news is really good news with those ISM numbers, and the thought process being, if it's good news, the Fed is probably going to raise interest rates. This is the breakdown of on a 15-minute chart of the E-mini S&P. As you can see, right off the open, after those economic data points, rallied up to right where we are now and pretty much stalled out going forward. Pretty tight range. All right, a couple of things that I've done with Apple. I had on the October 105 puts that I was short. Originally sold it for $1.07. I let that one squeeze out a little bit longer because I took a big hit on the Apple calls that I had, and decided to let this one milk out. It was so far out of the money that I wanted to squeeze this one a little bit further, and bought it back for 13 cents. I still have on my October 111 puts and writing that out. I think they're up about 10 cents, so about 10% of my max profit on that one. Then with GDXJ, because of that big sell-off yesterday, it really tested my puts. Those puts are in the money, so that's when I start to get defensive. And I had on the 52.40 strangle in October. I rolled those 52 calls down to the 42 calls, collected another dollar. Originally did that strangle for $1.05, so I've collected a little bit more premium. That lowers my break even on those puts a little bit. So if we can get a bit of a pullback, probably look to cover that relatively quickly. All right, that's about all I got for you guys today. Friday's webinar is going to be on the poor man's covered put. So it would be great for a situation where you see something selling off, but you want to limit your risk to the upside and be able to sell some puts against, or sell some calls against that, to lower that overall layout and margin requirement for that strategy. So check that out. It's a little bit better than the synthetic longs, synthetic shorts, just because you aren't going to have as much risk. All right, that's all I got for you today. If you can't take that, take it easy.